Real estate stocks to buy now, a business analysis. As the world's economy continues to return to its former condition, and as the economy is slowly recovering, there are opportunities in the real estate stock market that have the potential to grow in market value. Now may be the time to find good entry points to invest in these stocks at a favorable price. In today's video, we will be telling you and put you through what real estate stock you should buy and the state of the said stock. Enjoy and learn as you watch. You surely know that one of the largest playgrounds for the rich and the well-connected is real estate. Well, if you don't know, now you do. And according to one of the recent data that was published, real estate has also been the best performing investment setup in modern history, with numerous advantages compared with other types of investments. Real estate stocks that are invested across several sectors and industries over the long term can mean well for investors seeking higher yield, appreciation, and preservation of capital, the key tenets of sound investing. Here are the real estate stocks to buy. Number 1, Stag Industrial. Stag. The drive of the global economy is the industrial sector. It manufactures and transports the needed physical goods for the keeping of the economy and makes it bubble. Therefore, for that reason, industrial real estate is important for the smooth running of the economy. The industrial sector gives companies the space needed to produce goods and their distribution to their respective destinations. And one of the companies that are focused on industrial real estate is Stag Industrial. Stag Industrial is an industrial real estate investment trust, REIT, focused on the acquisition and operation of single-tenant industrial properties in the United States. Stag is unlike some REITs that focus their attention on just one aspect of the industrial sector, such as logistics properties. Stag Industrial's diversification extends to tenant geography, industry, etc. Stag is the only pure-play real estate investment trust that is very much active across the entirety of the U.S. industrial real estate market. Stag Industrial does not develop buildings. Rather, it comes into possession of them through sales, leaseback transactions with operators and purchases from third-party owners. These acquisitions form the building blocks of its growth and development, as most provide an immediate boost to cash flow through the existing leases. The company over the last 5 years has acquired an average of $675 million in properties. As of the end of last year, 2020, the company is in its ownership of 492 industrial buildings across 39 states with leasable space of 98.2 million square feet. Its portfolio comprises 73 light manufactured buildings with space of over 8.2 million square feet, 409 warehouse buildings with about 89.5 million square feet of space, 2 value adds or other properties with nearly 95,000 square feet of space, and 8 flex office properties with approximately 432,000 square feet of space. About 52% of Stag's real estate were in primary locations, classified as more than 220 million net retenable square feet. Approximately 42% were in secondary areas, 27 million to 220 million, and the rest of the real estate were in tertiary locations, less than 27 million. This is momentous because the United States industrial market has a total market size of over $1 trillion. Stag currently holds 0.5% of the share in the market, which demonstrates the potential of massive growth for the REIT. Many tenants have long-term leases. Halfacre said, Stag, with its focus on single-tenant industrial, is the current hot sector, particularly when you compare it to other single-tenant or net lease REITs that also own retail and office. Stag is unambiguously placed in the real estate stock market, offering a balance of growth and income. Amazon.com, AMZN, is its largest customer, which accounts for 3.8% of Stag's business. On other top tenants include Eastern Metal Supply, XPO Logistics, XPO, and FedEx Corp, FDX. If you are looking for a value REIT play, you may find it in Stag because it has lesser stock price than some of the other REITs. One of the benefits of Stag's diversification is that it helps in reducing the risk that just one tenant or market will significantly influence and affect its results. It also helps increase its total addressable market. Even though the previous year was a challenging year even for the commercial sector of real estate, Stag Industrial coped much better. Its sales of assets and sales of stock helped finance the Stag in its acquisitions when sustaining a strong investment-grade balance sheet. Stag Industrial got into 2021 with 136 properties in its acquisition pipeline, representing 24.4 million square feet and $2.1 billion of investment potential. The success of the company in converting its pipeline and capturing opportunities for additional acquisition will allow it to keep on growing its FFO and dividend in the coming years. Stag is an interesting REIT you should consider owning, especially if you are looking for exposure to fast-growing industrial sector or if you desire a high-yielding dividend that pays monthly. Number 2, Simon Property Group, SPG. Simon Property Group Incorporated is a real estate investment trust that invests in shopping malls, community lifestyle centers, and outlet centers. The company was founded in December 1993 by Fred Simon, Herbert Simon, and Melvin Simon. It is the largest shopping mall owner in the United States, and it is headquartered in Indianapolis, Indiana. It owns interests in 203 properties comprising of approximately 241 million square feet of gross leasable area in Asia or North America. Property Group Incorporated also owns, manages, and develops dining, shopping, entertainment, and mixed-use properties. Its portfolio of properties is, for the most part, made up of malls, outlets, and shopping centers in the United States, Asia, and Europe. Simon Property Group has a fast, steady rate and pace, being recuperating from its low of March 2020, exhibiting room for more growth and development in market value as it is already up for more than 31% year to date. Even with the SPG stock's volatility, the REIT has strong liquidity and interchangeability and cash flow. In the latest fourth quarter 2020 report of earnings, Simon Property Group has made more than $8 billion of liquidity and $1.5 billion of cash on hand. Halfacre said, Simon has been a stalwart of the modern REIT era since its UP-REIT transaction back in 1993 and has been one of the largest market caps in the space for decades. In general, Simon Property Group, as of the 31st of December 2020, has a balance sheet that is stable, holding more than $34 billion in total assets, higher than its total liabilities of nearly $31 billion. Aaron Halfacre, CEO at Motive in Orange County, California, said, one of the basic qualities for any good real estate stock is a solid management team with true leadership and vision. The CEO of Simon Property Group, David Simon, has taken numerous creative steps over the years. Number 3, Public Storage, PSA. Public Storage is a real estate investment trust, REIT, founded in 1972 by Bradley Wayne Hughes Sr. and Kenneth Q. Folk Jr., and it is headquartered in Glendale, California. PSA's principal business activities include the operation and ownership of self-storage facilities, which offer storage space for lease, generally on a month-to-month basis, for business and personal use, and also ancillary activities that is furnishing added support, such as a tenant reinsurance to the tenants at its self-storage facilities and merchandise sales, including the acquisition, development, and improvement of additional self-storage space. The company's segments include ancillary operations, self-storage operations, investment in SureGuard-less, and investments in PS Business Parks Incorporated, or PSB. As a matter of fact, the world's largest owner of self-storage facilities is Public Storage. And according to the company's financial statements, its equity interest is in more than 2,500 self-storage facilities in over 30 states in the United States. Public Storage also has a self-storage presence that is international through its acquisition of SureGuard Self-Storage SA, which is the owner of self-storage units across Europe. The investment in SureGuard segments owns self-storage facilities located in 7 countries in Western Europe, all operated under the SureGuard brand name. The ancillary operations segment of Public Storage is in charge of the sales of merchandise and the reinsurance of policies to protect against losses to goods that are stored by self-storage tenants. These activities are occurring with or following as a consequence of the primary self-storage rental activities. The investment in Public Storage Business Parks segment includes commercial properties, industrial parks, and primarily multi-tenant flex offices. PSA's growth rate over the last 5 years was 2% per year, according to the data from Refinitiv. Number 4, American Tower Corporation. American Tower Corporation is also referred to as American Tower or ATC. American Tower Corp is an American real estate investment trust, and it is an owner and operator of wireless and broadcast communication infrastructure in several countries worldwide. It is headquartered in Boston, Massachusetts. It is ranked 410th on the Fortune 500. As of the 31st of December 2018, the company owned 170,686 communication sites, including 40,757 sites in the US, 16,665 sites in Europe, the Middle East, and Africa, 75,872 sites in Asia, and 37,392 sites in Latin America. If you are interested in a 5G technology investment, then American Tower Corporation might be the best real estate stock that you should be interested in. The American Tower Corporation is one of the largest worldwide owners, developers, and operators of communication real estate that derives its revenue from the leasing out of the cell tower properties to telecommunication companies. As of December 2020, AMT in its portfolio holds approximately 181,000 communication sites. With the recent development of 5G and the high increase in data usage, American Tower Corporation is anticipated to drive innovation in wireless communication networks through connectivity that is widespread, and this should surely make it a great buy and hold investment. AT&T, T-Mobile US, and Verizon are some of AMT's customers. American Tower Corporation has a market cap of $93 billion, and analysts have estimated that its market price will increase from its current value, largely due to its business model that provides infrastructure solutions to power 5G. Number 5. Digital Realty Trust, DLR. Digital Realty Trust Incorporated is a real estate investment trust that invests in carrier-neutral data centers and provides colocation and peering services. As of the 31st of 2019, the company owned interests in 225 operating data center facilities totaling 34.5 million rentable square feet in the United States, Asia, Australia, and Canada. The company's largest operating areas are Northern Virginia, Dallas, Chicago, New York State, Silicon Valley, and London. DLR owns, operates, and develops data centers, working with businesses focused on diverse industry segments like artificial intelligence, financial services, digital media, and cloud software for international and domestic tenants. For the past 4 consecutive quarters, DLR has seen revenue increases that are positive despite the challenging economy. During the COVID-19 pandemic, Digital Realty's data centers were fully operational with no serious business disruptions. DLR signed new leases anticipated to generate $130 million of annualized GAAP rental revenue, as well as renewal leases that make up $156 million of annualized GAAP rental revenue during the quarter, according to the company's 2020 fourth quarter earnings release. This is reportedly an increase in the quarterly cash dividend of $1.16 per share, up by 4% in the fourth quarter of DLR, which is the 16th conservative year DLR has increased its dividend to shareholders. This signifies strength in the financial health and the business, and it continues to pursue growth opportunities and global expansion. Generally, these real estate stocks all have factors that point to an increase in the stock's market value and shows a promising stock market. That's it for today, guys. If you enjoyed today's video, make sure you hit the like and subscribe buttons to follow us for more updates, and don't forget to turn on the notification bell.